All right. So you want to learn how to trade, but you don't know how much you need to get started. So let's talk about that. And I suggest kind of either before or after this video, you check out a video I made called Managing Expectations. I think that's very important for you to watch because I'm assuming if you don't know how much you need to get started, you don't know anything about trading and you don't know what you're in for. Okay, so just watch that first or after, whatever. But anyways, you came to find out how much you need, so let's talk about that. So there's a little bit of a guideline that's talked about in the trading world, which is that you never risk more than 1 to 2% of your capital on any one trade. Okay, and if you want to last, you're serious about trading, you're going to take this pretty seriously. If you and your boys just want to be YOLOing one day expiry options to try to make loads of money, you're going to lose it all probably, but you're going to ignore this. You're going to use 100% of your account and that's fine. No, you're just going to lose it. But if you're serious about trading, you're going to take this seriously, right? So what's that look like? Well, if you have $5,000, one R for you, which is one risk unit, whatever, this is how much you're going to risk every time you put on a trade. So 1% would be $50. So $50 would be 1 R, or $100 if you're doing 2%, right? So you can work with this. This is totally doable. You have $500. Your one R is $5 to $10. That's really hard to do anything with, honestly, unless you're trading maybe like one share of something. Um, and then say you have 2 grand, you're risking 20 to $40 on a trade. This is a little more doable, still tricky, but you could probably work with this, right? And so kind of what methods can you be using to trade, right? Well, you can just trade stock, which is a nice way to get started. It's probably one of the less risky options for you to get into. But like Apple, for instance, right? Say Apple's trading at $244 a share. Well, you could buy 5 shares of Apple for just shy of $1,200. And then let's say you catch some nice move in a day that it goes $6. So you catch that with your 5 shares, you made $30, right? So it took you $1,200 to make $30, kind of best case scenario, trading Apple, right? In that example. So just giving you an idea of what your buying power looks like, right? So then there's also options. And if you're new, you really should not be trading options. They're a little risky. They're quite tricky. They're complex. There's the Greeks, which can get um, a little complex. But regardless, you probably don't care about that at the moment. If you don't have a lot of money and you were enticed by some Instagram video of some guy in a Lamborghini, you're probably going to be trading short expiry options, right? Somewhere in the 1 to 5 day expiry ballpark, right? So if you want to buy one SPY call just out of the money, you're spending $157 on that at this moment. So if you have 5 grand and you're trying to risk $50, this is doable. You could spend $157 and have either a mental or physical stop loss at $50. You could absolutely do that. And you might make 60, 70, $100 on this trade, whatever. Depends on how far, of course, prices go. You might make, a lot, but probably not. 200, $300. Probably not going to happen. And then, but be aware with options, especially short expiry stuff, things can get real volatile. So if you think you're risking $50, but price just has a big old dump ski, and you mark it out of your position, thinking you're risking $50, you might get out and find out that you actually lost like $70, right? Something like that. So just be aware that options that can get a little risky. And but also, say you spent $42 on a call. I mean, you could let that thing go to zero and you're still within your risk, you know? So that's kind of the good side about options is if you spend $198 on a call, you cannot possibly lose more than that if you're buying a call, right? So that's the upside to options. But also be really aware of liquidity when it comes to options. Like if the volume has some good sized numbers, that's good. The spread's probably going to be pretty tight. You know, market's closed right now. This would tighten up if the market was open. But currently this is a 6 cent or $6 spread. If you have some illiquid option chain where you might see some zeros, some fives, some 100s over here, stuff like that, the spread's going to get pretty wide. It might be a $60 spread. So like if you buy it and then sell it immediately, you just lost $60 even though price didn't go anywhere. So just be aware of the spread and how liquid these options are. So then another method, which is my favorite and is becoming popular nowadays, is futures, right? And if you want to trade futures, the margins can be a little aggressive, but it depends greatly on the broker. So for instance, this is Thinkorswim. This is powered by Charles Schwab. Okay. If I wanted to buy one ES contract, which is a pretty big boy move, that's $21,000 to buy one ES contract that I need in my account, right? And if you're just starting out, there's no reason you should be trading a mini contract. You should be trading micros, right? So let's look at the micro for this broker. Come down to MES, $2,100 to buy one MES contract. Okay. Now let's look at another broker, right? This is Tradevate. They have pretty affordable margin, right? So for instance, if we go to ES, if you want to day trade an ES contract, you need $500 in your account. If you want to hold an ES contract overnight, you're looking at $16,000 in your account. Micros, where are micros? Hey, buddy. MES, $50 to day trade one MES contract. $1,600 if you want to hold overnight. So you can see it gets a little more affordable depending on the broker. And you can totally trade MES and risk, you know, $40, $20, $50. You can do that. That's doable. And then there's kind of the other option, which is getting very popular, which is now prop firms, where you basically you pay this company a fee. They'll let you take some sort of evaluation where you prove that you have a profitable system or that you can make X amount of money without losing X amount of money. And then you can basically borrow their money in a way. So for something like that, you might be spending $50 to take a test. I use Top Step. It's fantastic. You might be spending $50 to take an evaluation, and then when you pass, it's $150, and then you now have a funded account that you can just trade. If you do a 50K, you can trade two contracts. They don't care if it's ES or MES, but again, where'd my handy dandy little thing go? Again, this, dude. Pay attention to this. People get a funded 50K account and they get all excited and they start trading e-minis. But what they're not thinking about is if you lose, I'm trying to remember, I think it's $2,500. I think it might be $1,500, but either way, let's, for the sake of the example, say it's $2,500. If you lose this amount, they close your account. So do you really have a 50K account? No, dude, you have a $2,500 account. So then what are we doing? Pay attention. We're risking maybe $40, $50 a trade on your funded, air quotes, 50K account, right? So that's another option for you if you don't have any money. So it's good because it lowers your risk. If you have $5,000 in an account, you can lose it. You can lose all of it. If you buy a Top Step account for a total of $200 and you blow it, I mean, you just lost $200. That's not so bad, right? Um, and it's a decent way to learn. They also have like tools for paper trading and whatever. But I'm hoping this was helpful. Again, please watch my managing expectations video if you're brand spanking new to trading. And I hope this was helpful. If you have any questions, feel free to comment below and subscribe if you're feeling spry. All right, I appreciate it. If you have any questions, let me know. And thanks so much.